Welcome to Second Take, the show that focuses on the issues behind the news. My name is lead editor Martin Creamer, joins me today to unpack the latest in the mining industry. Welcome, Martin.
Thanks, Ashni.
Now, Northam's half-year results showed that PGM supply is on a hiding to nothing. Can you tell us about that?
Yes, I think that Paul Dunn really emphasized the fact that platinum is heading for a cliff, by 2040. And it's all going back to a period when not enough investment was done, and we're heading for a period when suddenly, Europe wants green energy like yesterday, and all the countries are moving into new energy paradigms which will involve hydrogen. And then you've got the automotive side, where the whole battery electric vehicle is starting to make an appearance, but will it be as penetrating as we think? Well, Paul Dunn was adamant yesterday that it is going to take a long time for the internal combustion engine to be removed. And then, I also put it to him that Ford has just announced that they've got intellectual property to use hydrogen to power an internal combustion engine. So, you get your normal car, but you're using hydrogen instead of petrol. And he said, yes, and that's still great for us because they'll still need the platinum in the exhaust system. So he's saying platinum group metals are going to be in demand, and the supply is not going to be there. And, he's pointing to the fact that people didn't invest in the last 10 years, but now when they start trying to invest, they nearly get floored because the price of it has gone so high. The inflation rate is now so high that it's a different story compared to what you did. The costs of the past are nothing like the costs of the present. So I think there's urgency here. It also coincides with what Dr. David Davis said in his 17-page analysis, where he's saying the calculations about how much platinum has been consumed is incorrect, because he's saying that the platinum going into China will not come out of China. So people think, okay, there's a surplus because of what China's got, and they've got stores of it and stocks of it, but those stocks are not open to anyone. So you've got to subtract them. And if you subtract them, you suddenly find you're in deficit, not in the surplus that everybody is thinking about. So a lot of conundrums going on in the calculations around platinum group metals. This is a beloved metal group for us. We've got to see that we do it right. And you need some good heads to come down now and get the facts correct. Because according to Paul Dunn, he has done such a lot of research here. Every single project in the world, all the details of those projects, he says he's convinced he's got it. And not only that, but he says he can't see battery electric vehicles penetrating as fast as people think. He says because you think the rest of the market just sits there doing nothing. Not at all. They come in with what he calls hybrids. That's a mixture of being a battery electric vehicle and a normal, fuel-driven, petrol-driven car. And he's saying, but the way they are doing this is that your cost of travel gets so low. He was talking about the one product on the market. He says, you're traveling on thin air. He says, not only is the capital cost of this vehicle so low, but the operating cost is so low. So you think people are going to rush out and buy a battery electric vehicle? No, because the platinum that they'll use in these vehicles will also make sure that there's no emission or very limited emission. So he sees hybrids being strongly going for the next couple of decades. Battery electric vehicles there, but battling to grab the space. And then you've also got for the bigger vehicles, the hydrogen taking over. So in every aspect, platinum is winning, hands down. But he says there's not enough supply. So what are South Africans going to do about it? The way we carry on with the licensing of mining and all that sort of thing, we take ages to do anything. And he also introduced a way of funding, which I thought was very good, using bonds. He says that people, they go to debt, the normal debt in a bank, or they go to the stock exchange and say, give us some equity, give us some money. He says, and both of those needn't be done. You can go into the bond market where you don't interfere with the number of shares you've got. So, you don't dilute the shareholding. You make your shareholders happy. You use this bond for the growth, which he's done. He's created nearly 10,000 jobs, because he's been growing in this period where other people haven't. And he says that you don't dilute your shareholding. So, you keep your shareholders very happy. Same way as he says banks are using bonds all the time. But corporates like mining companies, they don't. And he feels they should do that because this can get that growth going.
And Anglo American is touting the idea of providing green energy to local communities.
This is incredible. You know, you've got a situation where pioneering the green energy reality in South Africa is Anglo American. You know, I mean, I must say, you've got to take your hat off to these guys. The way they've spent on technology under Mark Kudafani and Tony O'Neill, I mean, they have been brilliant. Now, so they've got the truck going that'll be run on hydrogen, green hydrogen, I must always add, and you use renewable energy to get that. Now they're developing such a lot of renewable energy that they will be able to have excess hydrogen. They're also going to use their mines. You know, a mine is a potential hydropower station. You know, you've got the water that's filling up in these mines. In the day, you use the sun to pump that water out, pump it into a dam. In the night, it trickles back. When it trickles back, it spins and it creates the electricity, and you've got this clean electricity. And so he'll use some of that to create some of the excess green hydrogen. And he says, why shouldn't the communities benefit? You know, with this, not only his fleet of vehicles and everything, he's got enough to spread into the community and turn that into electricity for the local people around there, which is a great idea. And it takes the pressure off Eskom, because, you know, those are rural areas. To get everything out there is going to be an arm and a leg. But of course, you work with Eskom, do the job, low cost, clean, green, get this electricity to the communities in the Limpopo area where it's got Mogalakwena, and it's win-win-win all round.
Lastly, Martin, Vedanta is investing 7 billion rand into the Gamsberg expansion, which will see increased metal output of up to 500,000 tons a year.
You know, it's incredible, this investment. You know, we've been watching Anil Agarwal for some time, and his approach to Gamsberg has been so different to South Africa's approach. I mean, I can remember going to Anglo American 30 years ago, and the person I interviewed said, oh, we want to go ahead with Gamsberg. You know, it's going to be an open cast mine. There's going to be great zinc at that time. He said, whoa, but we're scared because there's an ingress of contaminants, manganese mixed with the zinc. How are we going to do this? What are we going to do? You know, along comes Anil and his team, and they came in there and they said, no problem. We can do this. But they decided to stage their investment there, not go in too big, too fast. And I was there when they had the first blast in 2010. And now, you know, their philosophy is that you must earn money if you want to spend money. So they've got that money in now and ready to go for this next 7 billion expansion. And this is great news because, you know, this is an India-rooted company coming to South Africa with smiles on their faces. They love mining here because they say you can get the skills you need and everything. And they promised the president that 3 years ago at the South Africa Investment Conference, 3 years ago, they said, we will spend 21 billion rand in your country. Well, they've already spent 12 billion, so they've got 9 to go. They're looking for other big plans. They want to go into smelting. They want to go into refining in Namibia, which will be great for that region. And, you know, exporting refined goods is much better than exporting ore or concentrate, which they're doing now. They use the Saldanha line. Things are going well, they say, but the big thing is electricity. Where are they going to get electricity from? Because at the moment they've got 45 megawatts that they use. But if they go for smelting, if they go for refining, they want 200 megawatts. So it's a big jump. And we're seeing them keen to do it. So I'm sure they'll come to a solution there because they'll go with a mixture of renewables. They say base load is important to them. You know, I'm sure that there will be some solution if they work with Eskom. So that's a nice investment up in the Northern Cape. There are beautiful succulent plants there, rare. They're promising us they will make sure that they regrow these succulents so that, you know, once they rehabilitate the mine, they'll put those succulents back. And, you know, they say the community is our priority. They want to develop that community agriculturally. Very excited. So I'm very happy for this investment. I think more will come of it.
Thanks for speaking with us, Martin.
It's a great pleasure, Sashni.
That's it for today. Join us again next week for more news analysis on the local and global mining industries. And don't forget to listen to the audio version of our Mining Weekly daily email newsletter.